Good job, GD. All right, let's try this again. Leaving off where I was kind of at before we got shut down here, but max pain is $19.50 today. Um, it was 19 Tuesday and Wednesday, so we got a little bit up on that one there. Good morning, Keto. I'm all dressed up this morning. I know. I woke up a little bit earlier. I feel a little more awake than I normally do when I first get up. Let's take a look. Let's leave off, or let's start where we left off at the options here. Our lottery ticket winners for the day at $85 strike price yesterday. The total amount of options, call options at that price was 38.4 thousand. It's now 39. Let's see here. Highest amount of call options in open interest, besides that really high one that I just read off, is at a $20 strike price. Yesterday it was at the same number. It was 22.7 yesterday. Today it's 22.5. So the amount of options there have open interest has reduced a little bit. The amount of puts, highest amount was at $10 yesterday, still is. However, there was 18,000 contracts open yesterday. There's 18.1 now today. So the market's still kind of indicating, the longs and the shorts are kind of indicating that there's still going to possibly be a $15 close for the week. That's what they're at least pointing towards. We'll see who ends up being right, more right than the other. Taking you guys back over the first page, let's take a look at our Vertex data. There's our utilization, our 8 days of utilization being as high as it is. On loan amount, day over day decreased just slightly. It went from 117.3 to 116.5. There's the short interest values. Let's zoom in on this just a tad bit here. There's our short interest of the free float taking a little bit of a dip as well. And then let's add in our on loan average age per day, still going upwards. On loan amounts going down, but on loan average age per day going up, which means that they're closing out newer positions. Newer loans. So that's 2 days in a row of upwards movement on the on loan average age per day. So that tells me that we can go ahead and start that ticking timer of 15 business days. So starting from February 14th, you could be looking as late as March 7th would be 15 business days. However, we are off on the 21st, so it would actually be March 8th. Didn't somebody say something about March 8th? I don't know. I feel like somebody said something about March 8th. Two weeks. 2 weeks. It's always 2 weeks. Let's take a look at volume. Volume based off of this morning's numbers. Wow, we actually have really low volume right now, and we're sitting in 10th. Yesterday, our buy to sell ratio was 66 to 34. GME's on the top 30 list. They're in 27th. Their buy to sell ratio yesterday was 65-35. And let's see here. Let's take a look at Stonko Tracker. Trigger price for SSR for the day today is at $17.7. We'll up that here in a minute. Let's see how many shares they borrowed so far this morning. I'm going to break out my handy dandy little calculator. $2.15 million shares having been borrowed so far this morning. 2.3 was the number from yesterday, and an average amount of borrowing in a single day would be about 4.5 million shares. 42.8 thousand contracts are in the money on the calls. 112.2 thousand contracts are out of the money on the puts. Markets in Europe were kind of down, and in Asia up. So mixed signals there overnight. The VIX, IWM is down in the pre-market 0.49. Tesla is down 0.74. Amazon up 0.46. Cinemark is down 1.37. Doge is down 0.83. Bitcoin is down 1.31. GME is down 0.26. Robinhood is down 0.3, and AMC is down 1.22% in the pre-market. Our total inflow versus outflow, we had 10 million more in inflow yesterday. Those good numbers. Our volume this morning so far, very, very low. 26.5 thousand shares traded so far. That's super, super low. You can really tell liquidity is becoming a major issue just by the trading in here. Nothing to trade back and forth. On the daily interval, more buying pressure than selling pressure with an RSI of 52.5, which is right down the middle. On 1 hour interval, a lot more selling pressure than buying pressure with an RSI of 49.19, which is down the middle. On a 30-minute interval, we have more selling pressure than buying pressure with an RSI of 43.72. And on a 5-minute interval, more selling pressure than buying pressure with an RSI of 39.5. Get our Bollinger Bands up there, and you can see we're already touching down. You can see the order book, guys. I mean, the order book is really thin. Really, really thin. Just a bunch of large block orders, and that's about it. Yep, block orders only. Monty says 1847 to 2147 got you down. Now, I had a message. Let's talk about levels of participation real quick here, guys. So we got about 23 minutes before we get our 7 a.m. pokey stick of volume. And what I'm going to say is, if you go to the description box of the channel, you guys, it's always there. Every single day, it's just a copy and paste over. But basically, I have levels of participation as an owner of, or as a shareholder of AMC. And the number one level of participation is just buy and hold. It's actually one of the golden rules, right? Your very basic level of participation is buying and holding. That's it. If you want to just do the very bare minimum, that would be your lowest of low levels of participation that you could have. Number two, the second level of participation is to, when you buy, slap the ask, which basically means to buy at market price. So in other words, no limit orders. The reason for that is in order to have price discovery, you have to buy at market price. So when you say that you want to buy an order, you're buying at the market price, so that you buying directly to the market at market price. That helps to raise the price. I said rise. That helps to raise the price because you're paying. That's how the ticker works. Whenever somebody buys from the ask side, if somebody is asking as an example, right now it says $19.40. There's 1,175 shares there for sale at $19.40. So if you want to raise the price to 19.40, then you're buying the ask. Well, it's 19.39 right now, so you'd be raising the price by 1 penny the more shares that you buy at that level. So buying the ask is the second level of participation. The third level of participation is make sure you buy through the lit market through your broker. Some of you don't know this, but on Fidelity, they now have it through the app on your phone to where you can actually buy directly through the lit market. I know I've been asked before the difference between IEX and it's kind of weird. It's kind of weird. I've had that question quite often about whether you should buy through the IEX or I have it written down here. Hold on a second. The XNYS. And XNYS is what I had been told. However, IEX is also an option. If you have the ability to be able to buy through the IEX, that is a valid option as well. But certainly the XNYS is also directly straight to the market. The reason for that is you're avoiding scalping of your order. In other words, your broker is not going to internalize your order. They're going to send it straight out there to the lit market to have the order go through the lit market. That's really what you want to have done. It's the third level of participation. Some people don't want to take the time to do those kind of things. But if you care about having more levels of participation or participating as a shareholder on higher levels, then that's what you need to do. You need to research how you can buy through the lit market instead of just placing limit orders or buying whenever you feel like it by just hitting throwing cash into your account and just hitting buy. It's taking it just a step further. Another level of participation that I used to have in there was make sure your shares are not available to lend. I think that's actually a good thing to put back in there. I'm going to go ahead and add it back in. There are periods of time where having your shares lent is a good thing, and then there's periods of time where having your shares lent is a bad thing. So at this period of time when we have 100% utilization, I would say that having your shares being lend or lendable shares out there available by retail is a bad thing. We want to certainly dry that up and apply pressure. So I'm actually going to change or add. I'm going to add a level of participation in here. And I think this really should be level 2, is making sure that your shares are not available to lend. So there you have it. Buy and hold. Make sure with your broker that your shares are not available to lend. When you buy, slap the ask and make sure you actually, you know what? I need to switch those around. Level 3 needs to be because you can't make sure your shares aren't available to lend unless you've bought your shares first. So making sure your shares aren't available to lend is number 3. And then making sure that you buy to the lit market through your broker is number 4. So I just added that in there. Joe is asking, do you know about TDG? I do not. Hold on a second. No, I don't know. I'm just going to say I don't know. Cannonball Bronco, good to see you back again. Any predictions on volume? Good morning, Crazy Pepe. Oh, I see your prediction now. 29.7 volume prediction. Unless they're waiting for open, this volume is low. It is very low. I'm going to wait for the 7 a.m. Pokey Stick of volume before I make my predictions. But based off of these numbers, I think there's a chance that we could see some more volume pop in here just before 7 a.m. and then we end up hitting like 100 and I don't know, I'll say 115,000 shares. But yeah, I'm with you. I'd have to probably say like 20 to 40 million shares traded would probably end up being my prediction as well, which would fit right in there with the 29.7. Let me look up and see what you're talking about there, Joe. Hmm. Yeah, I don't know what you're talking about. Let's change our SSR trigger price, and also let's see if we can figure out what some of our trigger points are for the day to day. 1770. Let's see if we have. We need to try and figure out where our SPF is. So let me draw those lines out as well. Um, so 2096 is our last high. A 19.5% failure off of that would be 1687. So the blue line right here has got to go there. Let me move some of these lines around. So the dotted line is going to be our SSR, and then the blue line is going to be the 19.5 failure point down from 2096, which is going to be 1687. It looks like I have most of the numbers already set up here. I must have already had them set up. So basically a 19.5% failure in price, or a synthetic price failure, would be the first point at which we could turn around. 1676 would be a secondary point, and a third point, which would be paper hands occurring, would be at 1645. So if you guys aren't sure what a synthetic price failure is, it's a coined term that I've come up with, and it just basically algorithmically, those are the kind of numbers that hedge funds try to drop the price by, is like a 20% drop in a single day or 2 days period of time, to try and elicit people to sell their shares. Uh, it typically, you find that a lot of times they'll turn it around, like they'll release the stock price and let it go back up at around 20%. If it goes beyond 20% and hits like 21.5% or more, then you know there's actual real shares that were sold off in the drop. It could be institutions, it could be retail. You never know who it's coming from, but more than likely, if it goes beyond 21.5%, those are paper hands that are occurring at that period of time. So, and it happens. It's obviously going to happen. A lot of people aren't meant to have diamond hands, so they're just not used to trading in the market in a way where they watch 20% just disappear and are still sticking with it. So it happens. But for the most part, though, we have been holding really, really strong. Retail has, and we've been seeing it in the order books since, I want to say, like November-ish. Really, really strong. Like after like December, we were looking really, really strong. Keto coming in with the Keto coming in with his price prediction for the day at 1878 to 2178. Got you down, Keto. And by the way, Keto, you're doing an excellent job this week. Props to you. Um, you're making it look easy. You're making it look easy. Out of curiosity, how's your experience been so far? I mean, do you feel like it's pretty easy making these price predictions, or is it is it kind of has it been difficult? Cannonball Broncos got 1794 to 2094. I'll put you down, Cannonball. I want to put you down for both volume and price, just because I'm curious. 29.7. Let's take a look at our itchy booger. We're going to take a look at our itchy booger here real quick. Good morning, Paul. It's definitely been easier this week than last week. Well, at least for me, it's been easier this week than last week, that's for sure. Let's see what we got here for our itchy booger. Okay, so on the 1 hour, we actually have the first signs of downwards momentum coming into play here. So what you have is you have the conversion line. So first off, the price has gone inside the base and the conversion lines. But then what you see is you see this blue line, this base line right here, moving up and driving through the conversion, which is showing a bearish sentiment. And then you have your lagging line back here, just basically getting ready to meet up with your price line. those are all indicators for a swing trader. There would have been indicators, I think yesterday, like right around here to sell because they had their first instance where the price hit into the conversion, pop back out. This would have been their time to sell around here, and especially when they saw the price starting to move back down. So they would have gotten in back here at maybe like 1892 and then gotten out maybe at around 2005, made a buck off of their made a buck off of the swing over a day's period of time, and then if there's anybody in here still who is a day trader or swing trader, more than definitely with price hitting the baseline in the aftermarket hours now, they'll probably be looking to exit their position with the conversion line coming underneath the baseline and the lagging line coming in to meet the price line. So, but let's take a look at the 4 hour because I think the 4 hour is a little cleaner looking. At least it was yesterday. Let's see what we got going. So again, yesterday the baseline crossed over the conversion line. That's that's no good. You don't want to have that baseline crossing the conversion line. Price is still well above the cloud here, but I think we're going to see our bearish sentiment coming in here pretty soon. Lagging line is very quickly approaching price line. It's going to cross through the price line right here. So the stalling out price right here, putting us right at that like $19, $20 mark and stalling out the price is the hedge funds basically like trying to reduce sentiment from outside buyers to buy into this with, by making the signals look bad. So this is definitely these are definitely signs here for any kind of outside investors who would have gotten into the play back in here to reconsider and say like, okay, maybe we'll hold off a little bit here and wait to see if we have some more bullish sentiment coming in the future. Yeah, just hit live or refresh. It's me, guys. It's not you. It's me. It's my fault. It's not your fault. I promise. I wish I lived in a place where I had better internet connectivity, but I just don't. It's a sad truth. If y'all want to do anything about it, you can complain to AT&T. I have the best service I possibly can get in my neighborhood. Call AT&T up and say like, hey, my favorite YouTube streamer doesn't have internet access, and I want to be able to watch him. And he says he has the best. I'm thinking about becoming an AT&T member, but if you guys can't even provide my favorite YouTuber uh, good streaming quality, then why would I watch or why would I move over to AT&T? I can't watch him. It's terrible. He's trying to make history. He's trying to record history, and you guys can't even keep him alive. Now they're gonna shut me down. They're gonna shut me down for that comment. Let's see what we got going on here for this down detector because there. I mean, I know I've got bad internet connection, but it's usually not this bad, and I know right now that nobody's on in the household, so there's just absolutely no reason for this to be happening. I've absolutely shut off everything in the household. There's nothing on. What do we got happening here? Looks like EA is the only thing that's really taking a hit right now in down detector.